All right, welcome everyone. This is Bob Maurer. It is Monday, the 18th of November, around about 12:45 my time. I want to do an update of the current seasonal futures spreads strategies. I did send a email end of last week updating these strategies, so it'll be pretty much the same thing, but at least we'll get the visual here. All right, and I've got a couple new ones to introduce, so I will do that also. Okay, let's hop into the portal. You'll see the most current PDF version for this week, the week of November 17. And here's what we've got. 2 pages worth. The 382, these first page is all bear spreads. Bear spread in crude, we'll take a look at that one. 333, bear spread in RBOB unleaded gas, flat. We reached target 1. We'll look at that one. 334, bear spread feeder cattle, I'm recommending we cancel. We'll take a quick look at that. 335, we've got the bear spread in heating oil, made some changes. We'll see how that all lined up. Those changes are on this PDF, but we'll look at the screen. 336, bear spread corn. 337, bear spread natty gas. And then on the second page, you got 2 bull spreads and 1 bear spread. Bull spread in cotton should be in that one, March, July. Then we got a bear spread. This is a new one I'm introducing. Bear spread in the Class 3 milk. It's a commodity we don't normally trade. Volume tends to be a bit thinner, so if that concerns you, feel free to look this one off. But that is 339, the dairy spread, and then also 340 bull spread. It's a new one. This is a long spread in oats. Again, not the most liquid market there either. So I like the back data. I like the way it sets up, and we'll go over that briefly. So that's why I'm publishing this. But check out the volume. Make sure it's something you're comfortable with. All right, and you can kind of tell by the margin requirements that the exchange recognizes that there could be some volatility in these 2 spreads, with the Class 3 milk being just north of $2,400 per spread and the oats being just shy of $2,000. Okay, so that is where we're at with a quick look at PDF. Now let's get to the charts. I'm going to go to the ones that are going to be off the books here first, and the first one is that 333, which is the RBOB bear spread. Okay. So entry level 1 traders got in at negative 19.17. Level 2 traders no fill. And happily, the market, after filling that entry level 1, broke really hard the next 4 or 5 trading days and got through that first target of negative 21.15. The low is negative 21.24. So we got through it by 9 points. So it should be filled. So this one's going to go off as a winner. Everything did pretty much what it was supposed to do, happily. And it did bounce pretty quick, so I'm glad we got out that negative 21.15. So that is strategy number 333, bear spread, RBOB unleaded gas. Everything went according to plan, and we are out of that one with some level of should have been realized gain. And then we've got feeder cattle, which I'm recommending we cancel. And you can see why. We're pretty much almost nearing halfway through this strategy window, and although we came close, we didn't get filled on the only entry level up here at 272.5, and then the market pretty much consolidated sideways and then broke out through this little triangle that was forming to the downside, and pretty much hit targets 1 and 2, getting close to target 3. So basically it did what it was supposed to do, but unfortunately without us on board. So we will look for another opportunity in feeder cattle down the road. So I'm recommending that we cancel 334. All right, let's take the ones that are ongoing and that we are still either in or waiting for. All right, first one, crude. Strategy number 332, bear spread in crude. Entry level 1 is filled. I know we only got to that level a couple weeks ago, but I did see some fills come across, so we're walking this forward as if you are filled. Market's basically done what it was supposed to do with a nice little rally, short rally here to get at least the level 1 traders on board. Then it broke on down, came really close to target 1. Got down to a low of 12. Our target is 11, so basically did that. So if you want to be on the conservative side and you're normally getting out at this target 1, feel free to get out. We had a bit of a almost retest of it last night, basically a retest, and it held. Crude oil prices are up pretty good today, so that's helping the spread push up a little bit. But I want to give it some time. I'm not going to get out here at 11 quite yet. I'm going to see if there's some room to maybe, if they can find some kind of catalyst to break these little lows, these swing lows back in beginning of part of September and the end of September. Maybe we'd hit some sell stops, which would drive in a little bit more farther south, a little more gains in this particular spread. Couldn't blame you for dropping your stop down to 36 if you want to. I'm not going to quite recommend that yet, but if you want to play it on the more conservative side and don't want this window to turn into a loser, then, and that's the way you normally trade, then feel free to knock that down to 36 and see how it plays out. I'm not quite there yet. So all going according to plan. Basically no changes to the strategy at the moment. The only traders that are in are the ones who get in at level 1. And we'll just continue to watch this one. Currently sitting with some level of unrealized gain. Heating oil. So this one I did a lot of changes to. I walked it forward, and it had not reached, when I made the recommendation, this level 1 yet. So even though it probed through there 2 days ago, the recommendation to change it was before 2 days ago on the 13th, right there, revised as of 11/13. So you should have had that on the PDF. So what did I do? I raised the entry level and tweaked the stop level, and also killed the target 3 way down here. So we'll just take them one by one really quick. It's kind of a busy chart, but I'll make it a little bit prettier for you. Okay, so we canceled the entry level 1. Okay, well, this entry level 1, and we're going to replace it to up here, way up at 551. So this 347 is going up to 551. And then I'm canceling entry level 2. All right, canceling entry level 2, and we are only going to be getting in at 551. Right there. So we went from 2 entry levels to 1. The stop originally was 604. Because we raised the entry level, we're going to move the stop away. So now it's going to be up at 630. Okay. Thanks for your patience while I just kind of move things around a little bit, make it look like it's supposed to look. Okay. So now we've got 1 entry level at 551. We've got the stop at 630. And now we've got to change the targets. I'm keeping the target at 64 for right now. Okay, so that doesn't change. So that's going to stay the same. Target 1 and target 2 basically stay the same. The only thing that's going to change is this target 3 is way out of range now, so we're just going to straight cancel that one. All right, so all net, all we do now is got one. All we have now is 1 entry level. We move the stop accordingly, and we kept the targets the same except for target 3 I'm canceling. So we go from a risk profile that had been in yellow here, okay, to the one that you're seeing in orange. So none of this average in stuff matters anymore because we're going to 1 entry level. As for the risk profile, we were risking 551 originally. Now we're risking 330. Targets would have made 1,700-ish to about 2,200. Now it's 2,045 up to a little bit north of 2,500. So the risk reward has changed much more favorably. Likelihood of getting in, we'll see. Heating oil can be a mover. So the data was telling me that there was a more likelihood of this thing really popping up at this time for whatever reason, and that's why I'm tweaking that. And that is basically the changes. So if you have any questions, comments about that, feel free to let me know. But we basically changed the entries, changed the stop, tweaked one of the targets, at least canceled it, and now we'll wait and see if we can get filled. This white line here is a 200 period moving average, so if this market maybe have a shot to really push up, maybe even go a little bit north of the moving average, which it does sometimes, and then push on down. So if you wanted to widen out this risk a bit, that's up to you. Right now it's at $332. If you wanted to give a little bit more room, I wouldn't argue with that. Okay, so that is strategy number 335, bear spread heating oil. Major revisions there. No fill as of yet. Corn spread number 336. No changes. Definitely filled. Only one level, -3.5. Was looking good up until yesterday. Today had a little bit of a rally. So we just need this thing to fail. Break on down to get to our -6.25. So I would say at this point, again, no change to the strategy. We are filled and currently sitting with some modest level of unrealized loss. 336 is. Now we'll go to natural gas. All right, 337 bear spread nat gas got filled today. Should be filled at 254 or better. Next level would be 289. We just need this thing to pop up a little bit and then fail miserably and hopefully start hitting our targets. So the trend is intact. Been moving from the top left of the chart to the bottom right, building a bit of a value zone over the last couple weeks, bit of a pop to the upside today, and at least allowed entry level 1 traders in, and now we'll see what happens over the next couple weeks or so. So everything going according to plan, no changes, currently sitting with some level of unrealized loss. Cotton, strongly sideways. We are bull spread. We want this thing to rally, and our targets are up here, targets 1, 2, and 3. Obviously the longer we go, the less likelihood the farther target, but we'll just keep it in there for now. The only type of trader should be the ones who got in at the benchmark, -251 or better. Still waiting on the sidelines if you're a more conservative entry level 2 trader. And basically we've been in a, -270, about a 40-point range for 6 or 7 trading days. So the market needs something to kind of help it pop out of that. Haven't quite gotten it yet. So that is the cotton bull spread. Again, no change, about break even for entry level 1 traders. All right, new strategy, dairy class 3 milk. We are looking to get short. I'm going to call this going with the trend. This market's been breaking for a few months. We are looking for a bounce and then a break, kind of just like the natty gas we talked about. Entry levels are going to be 11, +11 and +28. Stop at +46. It was benchmarked at -17 a few days ago. And then our targets are -43, -64. And here's the risk reward profile. You can also see it on the PDF. All right, so we are looking to get short the class 3 milk spread. And then another new one to introduce is a spread in oats. And this is a bull spread. So this market, as you can kind of tell by some of the dots here for the day action, can be kind of quiet. Not the most liquid market. Basically had a bit of a bump to the upside. Pretty good pullback right to this white line, which is the 200 period moving average. It was benchmarked at -2.75. We're looking to pick it up right against that 200 period moving average again, -3.5. And then our entry level 2 is going to be negative 5.75, and you see the stop at negative 8.5. Targets above are positive 0.5 and positive 2. Risk reward profile is right here. So margin requirement is $2,000. We're only risking $140 or $400 depending on how you want to get in. So you can tell that the clearinghouse is basically indicating that this could be a less liquid, more volatile market. So bear that in mind. If it spooks you, then just don't do it. All right, so that's bull spread in oats, and I'll go into a deeper dive on these shortly, and and then post them into the portal. All right, so that's where we're sitting. That should bring everybody up to speed. A couple of the strategies have gone off, either from being canceled or hitting the targets, and then we've got the other ongoing spreads and those two new ones that we introduced. All right, so I'm going to leave it there. Appreciate you watching. I'll be back to you soon.